All right, welcome everybody to the Broward Real Estate and Business Network. We are a real estate oriented business to business networking group that's in Broward County, Florida. And my first speaker is going to be James Matarazzo with Guaranteed Rate Mortgage. And he's going to give us a summary of a Barry Habib webinar on the economic forecast. So thank you very much. Take it away, James.
Thank you, Alex. For those of you who don't know Barry Habib, he's been in the mortgage industry since the late 80s. But more importantly, he's an American entrepreneur. He's a mortgage industry executive, best-selling author. He's gone through all of the different cycles that we've been in the mortgage industry over the last 35 plus years. He held a webinar, very informative, yesterday. I want to hit some bullet points. I took copious notes. I have tons of notes, but I want to hit some bullet points for everybody on the call that's worried about where the market is today, where interest rates are today, what values are happening, what's really going on. And Barry does a really good job of taking out the emotion, and it's all about the numbers, and it's all about history and the cycles. First thing he said was, the Fed does not drive mortgage interest rates, inflation does. I've been kind of saying those things the last few weeks. He reiterated that. He's much smarter than I am. I get a lot of information from his company, MBS Highway. Inflation is too many dollars chasing too few goods. And again, I'm just going to hit these bullet points, and I could talk offline with anybody afterwards. The supply chain is slowly increasing. We're going to start seeing more goods on the shelves, which is good to take a handle on inflation. The Fed should be hiking rates up again. They should have started this back in January or February of 2021, but they didn't. They kept interest rates low through the pandemic. The Fed meets again on November 2nd. That's next Wednesday, as well as the 14th, and we are expecting Fed increases to the interest rate. His, being Barry Habib, his projection is that interest rates should come down by the middle of next year at the 5% interest rate range or below. And lenders are also thinking that's going to happen, and that's the reason why there's not a lot of par plus pricing. So we have to charge discount points. The fear with these lenders is that all of the people that we're closing in the sevens in September, October, November, December of this year are going to refinance, and the lenders want to get their fees up front. And this all makes sense. This is all numbers. It's all backed up by numbers. So we are watching that as mortgage lenders out there. We're doing things to try to help buyers right now, such as a 2-1 buy down, where the buyers can actually pay down the interest rate and maybe start at a 5 3/4 the first year, 6 3/4 the second year, and by the third year they're back up to the sevens. But we'll refinance them before it even gets that far. So that's one thing we're doing to try to compensate that. Recession starts when unemployment is at its lowest point, not at its highest level. So we are heading into a recession. We all agree that we are heading into the recession. When the lowest level starts to tick up, that's when the recession starts. As businesses slow down, you let go of employees, and then unemployment ticks up. Mortgage rates actually decline when we are in a recession. And that's what's going to happen as we head into that recession next year. The mortgage rates will decline. And this is all backed up by history. Housing stays strong through a recession. The only time we didn't have that happen in the 7 out of 8 times that we've gone through a recession was in the meltdown of 2007 and 2008. But that was a totally different scenario, and it's all based on inventory. The biggest number that he gave to us yesterday was that back in 2007, there were over 4 million homes in inventory in 2007 when the crash happened. We now only have 1.25 million homes in inventory. 41% of them are under contract, so it's actually less than 1 million. and it's all supply and demand. So we're not going to have the sinking of the values that we did in 2007, 8, 9, and 10 because of the inventory situation. Birth rates also are a big indicator on supply and demand. The baby boomers and the people born in the 80s, they're in their 30s now, and they're the ones buying homes, and they are the largest population growth that we've had. We are going to have an inventory shortage continuously for the next couple of years. Builders are not building like they used to. They're not building as quickly or enough homes. We're always going to have an inventory shortage, which is going to is good for the supply and the demand. Foreclosures are actually down 60% from 2019. You have to throw 2021 out of the mix because we didn't have any foreclosures. So if you just compare 2022 to 2021, yeah, foreclosures are up 150%. But in reality, they're down from 2019. So you have to look at reality. Appreciation rates in the last 60 years were around 4.5% per year. And that's even through all those 7 or 8 cycles of recession. So even sometimes they're in double digits, but the average is 4.5%. Purchasing a home is the way you're going to generate wealth, not renting. I hate to say that to the landlords on the call, but you're generating wealth by having homes. It's not the renters the renters are helping you guys out. For David, Lynn, and I, we're concerned about the buyers trying to buy properties. They could be investment properties as well. But rents are going to continue to rise during this whole recession. They're currently up 13% year over year. They're going to continue. So those are the most important numbers that I took from Barry's seminar yesterday. And really, if somebody's going to be in a property for for 2 years or less, I'm going to tell them to rent. If they're going to be there more than 2 years, and I can show them on paper with the numbers, 3 years or more, they will be ahead of the game because of appreciation. So that's really where we are. That's what I wanted to share with all of you. There's a lot more that he went through, a lot more charts and graphs, and I can go into that one-on-one with anybody that wants to. It was a very informative meeting, and it was a good outlook. We are in a very good position. And don't listen to the media. That's the other thing he said. Do not listen. The media is killing it. And it's not true. Numbers don't lie. We're in a good position. Me, David, Lynn, everybody on this call, we're in a good position. Stay focused, stay informed, and make sure that you really show your clients and your referral partners the numbers and the history. And that's really our job as loan consultants. We really have to take that upon us to teach everybody. So thank you for the time, Alex. I'm sorry it took so long.
Thank you very much, James. Does anyone have any questions for James about what he just presented? Just feel free to jump in.
So did Barry say anything about the federal government jumping in on the rentals, like in Dade and Broward, where they've kind of done some, what's the word I'm looking for? Legislation to try and curtail the increase of the rentals on a monthly, yearly basis? Did he say anything about that?
I don't recall him mentioning anything about it.
I was just wondering.
Just that they're going up.
David, as a landlord tenant attorney, my opinion is that Broward did what it's going to do about the rentals by changing the non-renewal period on month-to-month tenancies and for raising rents more than 5% from 15 days under state law to 60 days under county law. So I was a little surprised that that was all they were willing to do. But as you know, in Dade, they had passed a very comprehensive tenant bill of rights. And I thought that Broward was going to do the same thing, and they didn't. So the only bone that tenants got was the 60 days notice. I think that that's all they're going to do. They're obviously with the raising it, rents and the lack of rental property, especially in South Florida, there was some noise about rent control. But that's got very strong opposition, and I don't see there being the political will to do that.
I have a question on the comment of rent. I read an article from Forbes that rent has gone down, I guess, for the first time in like 2 years, but you mentioned, James, that rent is continuing to go up. Can you shed a little bit of light on that for me, please?
Yeah, because of the supply shortage and the affordability right now of borrowers that we pre-approved back in January and February, on paper, they can't qualify for the amount of rent that they're actually paying to try to buy a property. So we found that year over year, it's 13% year over year nationwide, is that rents have gone up. Maybe in the last couple of weeks they've gone down, but year over year, it's 13%. And as we continue to have this shortage, which we will, sellers are still going to be in control. The price of houses, when you're in a supply and demand situation like we're in, the sellers are in control, and it's going to happen again. We're in a dip right now because people are shocked, and they're kind of slow down and stop their house search. And I've talked to many people. I'm sure David and Lynn have talked to plenty of clients that said, look, I've been looking for 2 years for a house, and now the interest rates are so high, I'm just going to renew my lease. And by the way, my landlord just raised my rent another $300 or $400. So that's what we're seeing. But in general, year over year, it's a 13% increase.
Gotcha.
Okay, any last questions for James before we resume our introductions? No? Okay. All right, everyone, we have a special guest speaker today, Mr. Donald Sheffy, who's the principal of Insurenet Insurance Agency, and he is here to help explain our wild world of insurance, liability, flood, windstorm. So without further ado, Mr. Sheffy, what is going on with our insurance?
Well, I'll be happy to give you my insight if you will take me off a recording. I do have some compliance issues
All right.
with that.
Well, I'll tell you what, after you're done, we can go off recording and then you can be candid.
Okay. Well, let me give a brief introduction for recording purposes, and then we can go off. Yeah. Thank you for having me, James. Thanks for inviting me. I'm not really sure what particular part of the world of property and casualty insurance really interests you. I'm going to guess it's not automobile at this point. Homeowners of some sort, but be it for a landlord, be it for flipping, whether it be builder's risk or your actual personal homeowners, it's all wrapped up in the same, and commercial property right now. All of these are in distress where we are. There's not much I can say about that other than to tell you how it is we got here and what we hope to find out about it. But how do we survive the brief interval that we're in right now until the next thing changes? Because that's the one thing that's for sure about this business, is that just the minute you figure it out, they move the goalposts. So it's not always the carriers that are doing it. It's the legislature and things like that too. So as you know, we're in an insurance free fall. Why is that? There are two different entities that have opinions on why we can't get insurance and why we can't get insurance affordably. One is the insurance companies, and then there are their opponents, the attorneys that go up against them and make a living off of claiming some of the money from those insurance companies for their legal services. We have something, essentially a consumer protection component to our insurance here in Florida, where if you have a claim and you need to go up against your insurance company, well, they're a big entity. So to try to level the playing field in Florida, if you hire an attorney and you go after your insurance company to get more money, and the attorney is able to get well, this is how it was until a year ago, $1 more than what you were offered in the settlement, then all of your attorney's fees get paid as well. So that's called one-way attorney's fees. It was recently modified in the last legislative session to be a tiered kind of structure. Now, an attorney has to get at least 50% more of the total claim that was offered. And then he gets 100% of his fees paid. 20 to 50, it's based on that percent, and less than 20, they don't get any fees reimbursed. Now, can that change? Sure, everything's being challenged constantly, but so far that's still what's holding on. But that's what the insurance companies will say is the reason why they're not able to offer coverage in certain areas where there's a lot of those kinds of claims going on, or the actual carriers have gone out of business because they could not properly figure how to charge, because they can estimate what they're going to do for claims, but they can't be sure what they're going to have to pay in legal fees. So the attorney's side will be, hey, if they would have offered the right amount to begin with, we wouldn't have had to sue them. And so you play it however you want, do your own research on that, but those are the two basic sides as to why we have problems right now. And by the way, we are fairly unique in that in Florida, this situation doesn't exist in most other states. So that's where we're at right now, and what's going to happen. Where do we go to get changes? The rest is going to be kind of proprietary. I don't really want to talk about some certain carrier and their guidelines on a recorded message. So, whenever you're ready to take it off, let's get into the nuts and bolts.
Okay, Mr. Sheffy, when you said that Florida is different from other states with regard to attorney's fees, what do other states do?
Well, they're all over the place. Again, I'm not the authority on that, but I know, like in Texas, one of the places where one of the carriers was saying, let's go like them. It's a straight percent. If they sue and they get, as I understand it, that they get 10% more on the claim, they get 10% of their attorney's fees paid. So it's a complete sliding scale as we go. Other states, I really don't know. Again, I'm not an attorney, and I also don't do residential property insurance in other states. Commercial, yes, but not residential. So what else needs to be reported, and what do we get into with the details here?
Okay, if you could address the coverage for roofs.
Yeah.
I heard at some point your roof is considered fully depreciated and therefore not entitled to insurance payouts.
It varies by carrier. And there is also state law that recently has been put out there. Now, they're allowed to do something, but they haven't actually carriers have not gotten approval from Office of Insurance Regulation yet to implement some of these changes that are now permitted. Essentially, if they want to have a depreciated value on a roof, they also have to offer an option not to have depreciated value, only replacement costs on the roof. So it's a discount that you can opt into if they want to do it, but they still have to offer the full replacement costs on a roof. Otherwise, every carrier is going to be different. Some don't give you a choice at all. It is what it is. After a certain period of time, you're going to be on a roof schedule. A depreciating amount of money will be applied towards, percent will be applied towards whether it's a full roof or a partial roof replacement. Different carriers have different limitations. Others are saying, okay, if we give you coverage, it'll be replacement costs. So it's runs the full gamut, and it really depends the type of structure we're talking about. Single family home, multifamily residence. What kind of policy we're talking about as far as a commercial property policy or as personal lines homeowners policy, and what is the carrier, and then also where's the location. All those things are going to come into effect. So there's no right or wrong answer, but yes, there is depreciated coverage on the roof, and if you have a lender, that may or may not fly.
All right, I had heard something to the effect that if you do not allow your carrier to select the contractor to do the repairs, that they could give you a flat rate payoff of $5,000. So Is that true that you must allow the insurance company to pick your contractor?
Well, I'll give you an example of one carrier and again, the numbers vary by carrier and the rules vary by carriers, but some are requiring it, others give you an option. There is one carrier that gives you an option to say, okay, I want to be part of your managed repair program, and the managed repair program can be for anything that comes under a claim, or it can be just for a roof. If you have a water damage claim and you want to have the full amount of your policy available to pay for that roof repair, you have to use their managed repair program, and you have to declare that pretty close to the beginning of filing your claim. If you don't, then you're limited to a certain flat dollar amount, be it $5,000, $10,000. That's the sublimit for water damage repairs, because you're not using a managed repair program. You want to have the cash, and that's just the rules they operate under. Again, every carrier is going to be a little bit different. There are other carriers that aren't going to cover a roof at all if it's over a certain age, so it doesn't come into that. But yeah, from the standpoint of admitted carriers, we probably have an age limit that will determine, or an across-the-board policy that will say that you have a set amount, a sub-limit on your roof, unless you go with the managed repair program, or maybe they don't have managed repair. Maybe that's just all you're going to get out of it.
All right, any additional questions for Mr. Sheffy before we stop recording? All right, well, Sandra Lynette.
Could you explain more about the managed care situation? Because I've never heard that term before, so.
Yeah, term is a managed repair program. So essentially, the individual carrier has either their own people in-house that do repairs, or they have a network of contractors or repair people that they vetted. And they will, if you have a claim, let's go, for example, a water damage claim. You say, I want to be in your managed repair program because I got more than $10,000 worth of damage. You declare up front, I'm going to be part of the managed repair program for this particular claim. So the carrier will not give you any cash at all. They will send their adjuster out. He will look at the problem. He will go to his group of different contractors that could do the repairs and discuss with them what needs to be done. They'll make a decision. They'll do the repairs, and that'll be the end of it. You'll be made whole without ever touching a check. It'll all be managed through them and by their people.
Okay, but you said something about the person called knowing there was going to be $10,000 worth of repair. So did they have to go to an adjuster to get an estimate of what the repair would be before they put in the insurance claim, so they are not being blindsided by the insurance agency?
Yeah, you would want to know ahead of time if your repairs were going to be more than the $10,000 limit to know if you wanted to stick there or not. If it's going to be more than, and you didn't really have a choice in that matter, then you would say, okay, I'm going to have to go to the managed repair program because I've got $25,000 worth of repairs to do. If you were right at the $10,000 mark, maybe you take the chance and say, just give me the cash and let me use my people. To be honest, people are all over the place with this. Some people don't have a clue who to hire. They're happy to have the managed repair program. These are vetted people. I've had plenty of clients that have used the managed repair program and they're completely happy with it. There are others that just, heck no, I don't want somebody else doing it. I want to make sure it's done right. I want to be on top of it. Now, whether that's because they just want to have the cash or whether they actually have people they want to use, that's another story. People are all over the place on it, but that's the rules. So your individual carrier will determine what you can and can't do. Managed repair programs.
So when you're actually looking for an insurance plan, one of the key questions to ask them is, do they have a managed repair program in the event of damage? Yes,
and if there's a lender involved, this is going to be discussed right up front, because we need to know where the sublimits or where the denials of where the limitations of coverage are to make sure that they comply with a mortgage. So you're going to ask it, yes, but I think it's going to pretty much be brought to your attention right at the very front end regardless, because that's just kind of fundamental. But yes, you do need to know that.
And that's going to be brought to your attention by the mortgage lender?
If you have a mortgage, right, if you don't have a lender involved with their rules and guidelines and their vetting behind the scenes to make sure that it's a satisfactory policy to them, then yeah, then you do need to ask that question yourself and understand what the limitations of your policy are going to be.
Well, I'm really glad you're here today because I've owned properties before with mortgages and I've never heard anybody mention this before. So thank you for the education moving forward.
The managed repair program would not be anything that would preclude a mortgage company from preventing, or from saying that that doesn't qualify. That's good enough for them.
All right, any last questions for Mr. Sheffy before we stop recording?
Yeah, I was wondering, let's say you go with this managed care and things aren't done right. Who handles that? Who's responsible? You know,
Still
like
have the
50
you
year
still have
roof-
the option to hire an attorney to go try to adjust that claim that way. What you don't get with a managed repair program would be usually a public adjuster would not be willing to step in because they can't make enough money on something like that. So managed repair programs generally preclude that as part of your repertoire for settling a claim.
Well, what I was
yeah.
referring to is if the person we said, okay, go use your managed repair person, they come out and they put a cheaper tile on or they don't do the installation right.
Right.
I didn't hire them, so I can't sue them or fire them or whatever. And I can't get somebody else. And, you know, who's covering that cost? Who's covering the, yeah, we agree it was done wrong, now what?
Well, the carrier is responsible for making it right. So if you don't feel that they're right, you're still disputing this claim with them. So now you're back in the position of hiring an attorney if you don't have satisfaction from the insurance company, just like you would if you didn't like the dollar amount they were offering you up front. The scope of repair. The quality repair counts the same way. You would, at that point, if you can't work it out directly with them, you would have to hire an attorney to do that on your behalf. Or that's what you could do. Yeah.
Thank you.
Sure.
All righty, thank you, Mr. Sheffy. We're going to stop the recording. I appreciate your visiting our group and informing us about insurance in Florida.